After silver recently exited this blue symmetrical triangle, we are currently seeing it retest this support at around $79. Coinciding to that, we've seen that cumulative volume delta has actually turned negative, and so those technicals are certainly looking quite bearish. But to really understand the key drivers that led us here in today's video, we do not only take a look at those technicals, but also at the fundamentals and macroeconomics. And so if you like this approach, don't hesitate to hit the like button, subscribe, and also write us a nice comment down below if you have any questions or just want to give us your opinion concerning this topic. Now, what you can see here on the weekly chart of silver is that history is in fact always repeating itself. We tend to see those divergences where XAGUSD, where silver is actually moving to the upside, as the copper to gold ratio is actually also moving to the downside. And so whenever we do see this divergence happening, we've historically tended to see a crash here at silver and also at this ratio. And so we've seen it happen here with the great financial crisis in 08. We've seen it happen here in 2011, here in 2014, here with the COVID crash, and we might just see it happening once again. But this is not the only signal that is currently showing you that there is a lot of downside potential at silver. We're also seeing that the DXY certainly has bottomed and is currently looking like it is retesting those recent highs that we've seen. In fact, we are currently sweeping this last high that we've seen here in November 2025, and it certainly looks like we're seeing a new upwards trend currently forming out. And so we've talked about the DXY for quite a while, and we have obviously a certain correlation with the DXY as well. In fact, you can see that all of those highs that we've marked by those orange lines here, they've more or less always coincided to be bottoms at the DXY. And so if this recent high that we've witnessed here at silver in January, if that was actually the high, then we've actually had a low here quite importantly at the DXY. And so why is this actually happening? Well, we tend to see those divergences here with the XAGUSD, with silver and the DXY because of a similar reason. Whenever we do see the DXY move to the downside, liquidity conditions tend to be eased, and that obviously coincides to silver move to the upside. Now, whenever we do start to see this reversal here at the DXY, whenever we do start to see those crashes happening here at silver, that obviously tightens liquidity conditions. And we at Kronos have this thesis that this is about to repeat once again. We're not only seeing this reversal currently here at the DXY, we're also seeing this divergence with the copper to gold ratio. And in addition to that, we might also see quite similar things currently happening as we've seen it here back in the great financial crisis. Here back in the great financial crisis, we've seen that this high at silver actually coincided to the gold to oil ratio still moving to the downside for quite some time. But ultimately, we've also seen that ratio spike up once again. And in fact, that is what we've seen throughout history as silver prices started to fall. Now, why is this happening? Well, we're currently seeing this war in the Middle East, and that obviously coincides to higher oil prices. Now, as we're seeing oil being the denominator of this ratio tends to fall. However, we do believe that this inflationary development happening to oil right now is certainly limited in time, and we expect to see this ratio certainly reverse as we're seeing it happen with the DXY, and also as we're seeing this divergence here with the copper to gold ratio and silver. And so if we just have a look at this great financial crisis, for instance, you do see that all of those indicators that we've just assessed are certainly looking quite similar. We are seeing this divergence with copper to gold moving down, as we're still seeing silver in this upwards trend. We are additionally seeing that we are having this reversal here at the DXY, also exactly as it happened here back in the great financial crisis. And we're also having this gold to oil ratio falling a little. However, we expect to see a reversal here quite soon as well. And so this empirical approach allows us to really understand the divergences and to understand the correlations that we've seen throughout history. And if you just have a look at this empirical approach, you do see that history is currently repeating itself. And so we do have this technical structure of a symmetrical triangle that we've now recently actually invalidated with this breakout here to the downside, we're also seeing this coinciding to cumulative volume delta turning negative. And so those are certainly bearish factors. Now, coinciding to that, we do have those macroeconomic bearish factors that we've just assessed. And so there seems to be a lot of downside potential, especially if you we're currently actually seeing that this volume area is more and more exited. And so you have to understand that this visible range volume profile that we're looking here at is certainly acting like a magnet. And so when we exit those high volume nodes, for example here this one at around $84, this tends to actually move, or this tends to act like a magnet. And so the next support, the next phase of consolidation might be here around those levels that we've also recently seen being a lot of volume traded. You can see that those actually tend to see a lot of consolidation, and so we might see some consolidation in those areas. However, we do expect that we might see some short-term volatility, but certainly we expect to sooner or later see a formation of a long-term bearish trend here at silver. We've seen that symmetrical structure, we've seen that consolidation here at those areas for quite some time, and we expect to see a point being made, a decision being made in the next few months. And we certainly believe it's going to be a bearish trend happening next here to silver, as we've seen that long stretching upwards trend, obviously leading to higher prices. And also as we're seeing those macroeconomic developments currently mimicking history, this seems to be the ultimate argument that we might see a deeper structural correction here at silver. So if you like this approach, if you want to give us your opinion, don't hesitate to ask questions down in the comments. Give us your opinion down in the comments. Don't miss to hit the like button, hit the subscribe button so you support us, and don't miss future videos. Thanks for your support. See you the next time. Bye bye.